Welcome to Quant Monitor. In this video, we are looking at the XU Gold ST ATR H1 strategy. This strategy is designed for XAUSD or gold on the 1 hour time frame. Unlike faster intraday systems, this strategy works with a higher time frame structure and focuses on cleaner market movements. The main idea is to capture directional opportunities in gold using a SuperTrend and ATR-based logic. Gold is a very specific market. It can be highly reactive, volatile, and sensitive to macroeconomic conditions. That is why controlled risk, stable behavior, and long-term consistency are especially important here. Let's take a closer look at the equity curve and the logic behind this strategy. On the screen, you can see the equity curve of the XU Gold ST ATR H1 strategy. The strategy is based on a SuperTrend and ATR style logic. It uses volatility and trend structure to identify moments when gold may continue in a directional move. The purpose is not to catch every small fluctuation. Instead, the strategy waits for situations where the market structure, volatility, and trend conditions are aligned. What is important here is the long-term behavior of the equity curve. We can see an early period of stagnation and small drawdowns, followed by a more stable upward development. This is exactly why I use Quant Monitor. I want to see not only the final result, but also the character of the strategy, how it behaves during stagnation, how it recovers after drawdowns, and whether the equity curve remains stable over time. Here are the key statistics of the XU Gold ST ATR H1 strategy. The test shows 521 trades with a profit factor of 1.77 and a total win rate of 54.13%. The strategy has a recovery factor of 8.35 and a linear correlation of 0.96, which shows a relatively stable long-term equity structure. The largest profit trade is 79.85, while the largest loss trade is minus 40.93. This gives the strategy a positive average trade profile, with the average profit trade higher than the average loss trade. For me, this strategy is interesting because it adds a different market and a different time frame to the portfolio. Gold does not behave the same way as indices or currency pairs, and that diversification is very important. Thanks for watching this Quant Monitor strategy review. In the next video, we will continue with another strategy from the portfolio.